Hi, Stephanie. Thank you so much for joining me today. This has been a really interesting journey for me going down this rabbit hole with condos because I think we can all agree in the state of Florida, there are things going on that we need to be talking about, and there are buyers that are concerned that aren't in the market for condos right now for valid reasons, but I'm not even sure they fully understand what those reasons are and how those reasons are going to resolve. And I think that they will. Um, but so I'm really trying to have some valuable conversations with agents, and you're one of the people that I know has can add a lot of value to this conversation. But first of all, let's talk about you. You are with Keller Williams, Fort Myers, and the Islands. So talk to me a little bit about you and
Yep.
your market.
So we are Southwest Florida. So we are about roughly 2-ish hours from Tampa Bay area and the same about 2-ish hours from Miami. So we are all Gulf Coast. It depends on where you live. You could have Gulf access. You could have, all this water around you, or some of us live more inland. So we kind of experience a lot from both markets in like influx or kind of people leaving to go to maybe the more north of Florida or even more south of us. We are the home of many hurricanes the last couple of years.
Mm-hmm.
So our market is kind of very different from, let's say, northern Florida. We have a unique set of challenges, is the better word. And also, we had a direct impact from the Miami condo collapse a couple of years ago, or a few years ago now.
Yeah. Oh, absolutely. Well, yeah, your market is very different because I'm in Northeast Florida. So I am in the part of Florida that people, if they want to stay in Florida but get away from that, we are where they go because we have
Yep.
some odd geographic. I've got to come up with a real explanation for this. There's a geographic reason why we don't tend to get direct hits from hurricanes where I am in Jacksonville. But
Right.
yeah, so we do see people heading up this way for sure. But by the same token, I have people here that are talking about wanting to be down where you are. It's still a desirable area if
Yep.
you're just kind of in flux. And yeah, so we've
Yes.
all been, and I also don't think, I think y'all further south are hit more from the Surfside condo collapse with all of this than we are because we're a newer market. We have developed in the last 20, since 2000, we've really started to see Jacksonville develop,
Yeah.
where a lot of South Florida really has developed much earlier than, I mean, not that it's not that nobody was here, but we have really grown and come into our own in the
Yep.
last since the turn of the century where it's different for you. So
Right. Exactly.
like we and to be honest, our reaction up here is a little different than your reaction down there. I was talking to another agent on the east coast of South Florida, southeast, that the response was very like, yeah, this is important. We're really glad that all this is happening because these buildings are a concern. Whereas in Jacksonville, we're looking at it like, what are you talking about? Like they
Yeah.
just built this in 2001 and it's inland. Why are we doing this structural integrity thing? Why are you, what is happening? Because it doesn't make sense
Right.
to us necessarily up here right now until they find something and you
Right.
go, oh yeah, thank God they did that.
Right. And that's what it comes down to. I think every market is obviously very unique and different. And with us, like I'm in Cape Coral right now. I was checking out a property and there's a building not far from me. I think it was built around the 60s or 70s. So I can probably guess a couple of things that maybe have not been checked or done. The structure was older. I'm still shocked, and this is just me coming from Pennsylvania, that stuff is built with wood here. Like that just seems insane to me. But it's very much so very active still. So it's a shame that it's occurred, obviously. But I hope people learn from it. I think there's always a lesson in everything, even if it's a little bit harder to find in some moments, and we really fast, once the Miami condo collapse happened, a short while after that is when Hurricane Ian hit for us. And I'll never forget, we were in our risk aversion class the week Ian was hitting, and that we were talking about the Miami condo collapse and all the new regulations and laws that were coming from that. And at that point, we were like, oh, 2024, 2025, it'll be relevant. Oh, it was relevant real fast here. And now here we are. like what, a month, 2 months from all of that.
Right.
And we've heard chirping over here, you know, even last year of buildings and HOAs and communities being underfunded. So you're putting on multiple hurricane impacts on that, plus the new laws and regulations.
Yeah, it's going to be interesting. And this is why we say, and I don't want to be negative about condos, because actually I love condos. I don't
There's a
want to
benefit
maintain
to it.
yard. There's right. I live in a condo. I love it. I don't want I don't want to be negative about them. And I feel like as an affordable housing solution as well, which know we
Yes,
very much need, we need to be looking for solutions to the problems that are getting ready to be
exactly.
uncovered. And I feel like right now these new laws and I'm going to do a whole different video just specifically talking about the laws with one of the attorneys.
Yes.
But what's happening is, just so that anybody who's watching this knows, because of the Surfside condo collapse, we have new regulations going in by the end of the year that all the condos, and we can get into the nitty gritty of it, it doesn't matter, but condos within 3 miles of the beach and 30 years or older have to have a structural integrity report done.
And if there's, it really impacts if you're 3 stories and higher is a huge difference too. So at least here, because I have a couple of people who, whether is they wanted to go into a condo, or, you know, just wanted a different one, the biggest factor is, okay, well, one, let's focus on ones that are under 3 stories, right? Let's see what, is there anything like that? Because there'll be those, I don't like to say requirements, but those impacts may be significantly less, right?
Right. Well, they're not having to, because they're not 3 stories or more, they're not having to do the same reporting, the same. I mean, obviously those structures still need to be maintained, but the risk is
Correct. Correct. And like their budget requirement, the reserve requirements are going to be different than one that's 4, 5, 6, you know, all those factors. So that's really good. And again, as far as affordability, it makes it a condo for somebody, makes it, you know, possibly more affordable. And between insurance, maybe they want those amenities, maybe they don't have a lot there. There's all those different things, and they're so vast over here. We have some that are golf course communities. We have some that are not. Some are 55 plus, some are not. So if you can pinpoint what someone's looking for and then build off of that, I'm team, why is FHA and VA not allowed to buy a condo? Because if we're talking about affordability, that's a huge difference. That's a different conversation too. So we have to find solutions.
Right. We absolutely, and I think as realtors, we're going to have to be the ones, but there was a condo community here in my area, and I'm not going to name names, that literally sent out a very harshly, the community association management company sent out a very harshly worded letter to everyone in the community saying, as your community association, it is not our job to make sure that these properties are saleable. And I thought, oh, but you did not just say that. So, and what I am realizing in these conversations that I'm having, because I'm being very pointed about them, right? You and I are both professionals. We are having these conversations all the time. I'm being very pointed because I'm kind of creating a series of conversations about condos.
Absolutely.
And I'm realizing the insurance companies, and when I talk to a really good insurance company here, and they're talking about the deductible being lowered from 5%, which is the minimum amount, the minimum deductible for financing, right? Unless you're doing non-QM financing, they're lowering it to 7 or 8% because of the affordability factor. And I'm like, that's great. But the CAM's doing that, and the insurance company is doing that. The lenders aren't going to lend on it because they're underinsured now. And these conversations are being held, these decisions are being made in a vacuum without people realizing the impacts of what they're doing. There's also the affordability. All this is coming up at a really unfortunate time in our economy when people are with inflation, you know, not, and this is not to make it political, because that's not about politics. That's about,
no, it's about I just had this conversation with somebody the other day too. It's like, at the end of the day, everything's expensive right now, even more so.
yes.
And even more so than 10 years ago, 50, whatever it is, right? And when we have to sit here and be like, okay, so what are we not going to do? What are we not going to buy? And we're taking away other factors of quality of life. It's like, then it becomes a tragedy. And I think people have to learn to have the hard conversations. It's going to be uncomfortable, but we can figure it out if we have those conversations, right? How many things could be avoided in history in general, now 300 years ago, 5 years ago, 20, whatever it is, if we just had hard conversations. And I
Mhm.
don't know why we're not capable of doing that, because there is an affordability factor when it comes to a condo.
Right.
But
It's
why
an
are we
excellent
not
first
holding
time
the
home buyer
insurance?
option. Yeah, except that right now your first time home buyer isn't really actually right now, unless you're cash, you're probably not buying a condo, which is
Right.
problematic. Um,
Yep.
and that first time home buyer, yeah. Sorry, and I did not mean to interrupt, although.
No. But it's the truth. Like we're a veteran homeowners. So my husband is Air Force veteran. We've only ever used his VA loan option. You're going to tell me, and I did not know this, 20 years ago, 15 years ago, that I couldn't have purchased a condo because my husband has a VA loan?
Mhm.
That doesn't make sense to me.
And we have I'll say a handful. That handful is getting smaller and smaller, and I'm noticing that the FHA and typically if something is eligible for FHA, then it's also eligible for VA. That's a good indicator.
Absolutely. Yeah.
So yeah, but you can actually get the list of the FHA approved properties online. There used to be a handful of them, and those are dropping off because the associations and the association management company has to maintain that. So, and again, when you're getting community association managers coming at you saying, but it's not our job to make sure you can sell it, they don't, it is a problem.
And that's a
And
whole
as,
other, we need a Zoom on property managers. That's a whole other problem I have,
oh,
because
absolutely, absolutely, we do.
it's a whole other thing. Like, I take what I do really seriously, probably to a fault. That's just the God's honest truth, right? And so we were really convinced in this area after Ian that we would have to, that VA was going to be forced at least to be able to let them buy condos, because we lost off the bat 10,000 homes, literally gone,
Wow.
floated away, destroyed, not fixable, gone. Sorry.
No, it's okay.
And we still don't have enough. And yet they're putting more condos up or apartments, whatever it is. And how many people can't go in them? And that's a whole other problem I have,
Well,
and
yeah. And in Florida, we're heavily VA. I have two Navy bases in my market. Two.
yeah,
Like we are heavily VA. And so our veterans aren't able, again, as we're talking about VA, our current active duty military and our veterans that are coming back to Jacksonville because they loved it, they're buying these condos is not an option for them when it really, especially the lock and go lifestyle, if you're military, should be
yeah.
definitely something that's explored, right? Um,
And I also think that's about educating, because I was told, and again, I'm not a lender, and this is probably something to explore too, that it could be requested for the association to approve FHA or VA for a condo, but it's a matter of them, something, again, I know with insurance, but there's a way that you can try, but there's no guarantee. Like
right. Well, it's right. And the association doesn't approve it. The lender approves it, right? Because it's
right,
underwritten to Fannie Mae and Freddie Mac standards. But there are requirements, and those associations know what those requirements are, right? And they've been
mhm,
through this enough. And if they're not maintaining those, and it's what does your master insurance policy look like? What percentage
right.
of renters, all of those things that need all that information that needs to be maintained so that they can determine that. And the other thing that I think that we're seeing, which is a little bit heartbreaking, is as I don't know about your market, I know in our market, I do not although it feels like it, I don't consider us to be in a buyer's market until you look at condos, in which case we have a full year's worth of inventory sitting on the market today. Single family homes were at about 3 months. Townhomes, maybe 4.5 months. Condos, it's a year. I just did the
It's,
math yesterday.
I have one listed, 300 and like 50 to 60 days.
Yeah.
That community still, it's a 55 plus, it has still not addressed the roofs from Ian. They're still tarps because they are still in negotiation. I've dropped the price multiple times. I had an attached villa style one that sold months ago. That one took a little while, but the 2-story one,
And it's the building's 2 stories?
Mhm.
So the building's
The
two
buildings,
stories. It's not even,
right. So,
that is not even about these new requirements. That is about the existing issues.
yep.
It, yeah, it's
And they're
concerning.
underfunded. And they're underfunded. They increased the HOAs beginning of this year, $200 to $300. And there's also potentially an assessment that they're still discussing.
Yeah, and that's, I mean, and that is a massive barrier to entry. And that's what we're looking at.
Yep.
And by the way, any of these buildings that might have at some point been able to become FHA eligible, as this market continues, what we're going to see is a larger investor population coming in and swooping in and picking them up cheap, which then creates a problem in your rental to primary residence mix, which is one of the factors that is determining whether or not they're FHA eligible. So as soon as these investors start swooping in, now none of these are going to be available for FHA financing. It's not NVA financing. It's just not going to happen. And
Yep.
I think we can all agree that our veterans deserve better.
Yeah. And then you take into account, I think a couple of them, from what I know, put in provisions. They changed their bylaws where now rent owners can't rent for a year or two.
Mm-hmm.
So to kind of try to stop that, because we had a lot here that had a ton of renters, like an excess amount. And it's like, okay, but you don't buy a condo, for example, or anywhere to then be surrounded by rentals or Airbnbs.
Right.
That's a huge problem in Cape Coral. Like there's a lot of issues that impact all of it. And specifically with condos, I think it's a kind of a multi-bucket issue.
Mm-hmm.
People, I don't know if it was popular up there, but down here, it was real popular for the HOA to superficially keep the dues lower to keep everybody happy until now we've got back-to-back problems.
Right. Oh, there were definitely flaws in the plan that are coming, I believe, are bubbling up to the top, right? But they're all
Yeah.
bubbling up to the surface at the same time. And what does that do? It is, I believe it is starting to generate, it's going to generate a real housing crisis in Florida. And we can
100%.
see it coming. It's not even a question at this point. When you are in heavily military areas, if you get new orders and you have bought a condo and now you need to sell, now you can't sell. When you bought it, it was a great deal. Or, it made a lot of sense, but now you can't sell it, but also maybe you can't rent it. If you've got a
Yep.
cap on rentals, this is a broad reaching problem that I don't know if it, I'm going to say it out loud and I'm going to regret these words coming out of my mouth, because I'm from the government. I'm here to help, are the most terrifying words in the English language. But I don't know if there's a legislative solution at some point. Like there has to be somebody looking at this from, in a big picture way to solve this issue. And housing affordability, if we're looking at housing affordability, solving this problem with homeowners associations, I don't know if it's a fund that they need to be able to draw from. I don't know what the answer is, but there has to be something.
I agree. And the thing is I think, and with the massive tragedy that occurred in Miami, I can appreciate them trying to stop the bleed from it. I can, because that should never have happened. Somebody in that I know from our Miami office, he went there right away to help.
Oh,
And so something needed to be done. There's no doubt about that. I know our insurance problem was finally starting to trickle up a little better.
yep.
And now we have this again, right? Back to back to
Right.
back. And it's like,
Yeah, you can't have
when
a
does it
Helene and a
stop?
Milton back to back and, within 2 weeks and not suffer consequences from that.
Yeah. So, I don't know what the solution is right now. I'm curious what's going to happen insurance wise after this. I was actually, somebody I spoke to said that they don't think the homeowner's insurance is going to be the problem. They think the car insurance is going to be, because there's estimated 53,000 cars that are going to have flood claims. So here we are again. It's like, well, okay, well, maybe the insurance market will stay where they're at and it's stabilized for a hot minute. And, that could help the condo problem slightly, right? So I think it's going to take, I think it's going to take 6 months to a year to see, what, if anything, will improve with it.
Mhm.
I mean, I don't know how your season was last year where you guys are at. Here, it was interesting. People came more than they did the year before, obviously, but not as much activity occurred as we anticipated versus right now. It's as if season started coming back weeks ago. So I'll be interested if those condos will sell more, because there's a ton on the market here.
Right. Oh, well, here too. And my question, we'll see how this plays out. My question in our market is and I still don't have a good answer on why, if you are more than 3 miles inland and you were built in 2003, why are you now, right this minute, when it's the first rush of getting all of these done, why are you doing your structural engineering report? Why did it not wait until next year? Because you're not due for 30 years, which gives you, if you're built in 2003, you've got 9 years to get this done. Why is it happening now? But fine, whatever, you decided that for whatever reason, and I know that they are terrified of liability on their end as well. But if as a community or as a community association management company, you've made that decision. Now we're sitting there waiting for the reports to come in and waiting for the studies, and they don't have meetings coming up. They don't even have them scheduled because the reports aren't in, because they're not due until the end of the year, so that we even know what the situation is. Perhaps there is an issue and perhaps there was a reason to do it, and we don't know what the assessments are. And you're in a community where you've already got 20 units on the market sitting there and no movement because buyers think they're writing a blank check to the homeowners association for assessments that they can't.
I'm also curious. I'm curious if they did that now. And this, again, I'm just totally speculating for the record. Like, I'm curious though if they did that early because of the last couple years with more hurricanes, and they are like, maybe we should have this checked. Like, I don't know.
In
I'm just
Jacksonville,
totally
I would
guessing.
argue that. And where you are, sure.
Yeah.
I think that's a completely valid conversation to have. In our market,
yeah, I'd be curious
I don't know
why.
that I can make that argument. I'm curious as to why. Agreed.
Yeah.
I don't know.
Yeah.
And by the way, in this project, like, I have no problem getting lenders to talk to. I have no problem getting insurance agents to talk to, realtors to talk to, and I'm realizing that the problem is so much bigger and deeper than I really realized that it was. So it's been, as I'm thinking about it deeper, it's been very eye-opening. The people that will not talk to me are the community association managers. And I think they're concerned about liability, because it's all going to fall in their lap, right? If there's issues, the minute there's issues that are uncovered, it's, well, why didn't you know that this was an issue? I mean, I can sympathize for sure. And I don't think that finger pointing is going to be the way that we get out of this problem. I think, it's like, I think we're mired in it, but I think if we're not including those association management companies, and yes, we could do a whole series on association management companies. I think if we're not including that voice, we're in trouble.
I wonder, I know one, and I never even realized she went into property management. I met her, who knows, I think at my kid's event many moons ago. I'm curious. I'll reach out to her and see, like, hey, can you answer a couple of questions? Because legitimately, I just want to know the whys. Like, and is this something you're seeing in Southwest Florida? That sort of thing. And maybe she'd be willing to, like, listen, just give me a dummy down, explanation of it. Like, because
and their perspective. Because by the way, I also, as you can't control it, if you are living in a condo and you've got your home and you're at your condo association meeting and you've got all these expenses that are going up, can't do anything about insurance, can't do anything about, you got to have lawn, the grounds maintenance, all of that. I also understand that these community association management companies are getting squeezed like crazy because there's just no budget. And so now you're asking them to take on all the liability and for no money. I mean, for very, like they are not, that is not a traditionally incredibly well-paid position. It's just not. So I have sympathy as well. I don't want to just point the finger and say, there's your bad guy, because that's not accurate, but it's problematic.
It is. Like one community here, one condo community, I sold the property in from Ian 6 months prior to Ian. So Ian was September 2022. So let's just say beginning of summer, for example, they had switched flood carriers. That flood carrier, when Ian came, it's in their policy, we're responsible for 100% of the damage on the inside of these units, which everybody was, oh, great, except the insurance company. Now they're talking about a $25,000 to $35,000 assessment by March of 2026, because those reserves and the deductibles after the insurance and what is the reimbursement program paying, you can't get rid of those in there now because of that.
Right.
So
yeah,
that's a huge problem.
and
yeah,
I'm like, I keep going back to, okay, so I feel like what I have done so far in these conversations is really identified most of the problems, not having found a community association manager that was willing to chat with me. Again, I actually do understand why. I'm not trying to, I'm not trying to
no,
make
it's
them
a
out to be the
liability thing.
Yeah. But identifying the problem is not a problem. It has been, I feel like it's largely identified. We have a good handle on what it is, but there has got to be a solution, because Florida's heading.
Yeah, what is that?
Right. What is that? Because if you can't, and just if you're talking about populations of people, now you have these massive assessments that people can't pay. I mean,
so
a lot of times
that's a problem here. So this was going to be my next point. Some of these people maybe bought this as a retirement home for them, right? But this is where they live. So maybe they paid cash for some of these, and I'm going to make up a number, for $85,000 15 years ago. They've been fine. They have a fixed income now, all good to go. They can't afford a $35,000 assessment.
Right. So what happens?
They
now
can't afford
people
right.
in that stage of life. We've got people like that. They can't sell. They can't. What are they supposed to do? And now are these, at some point, the associations have to foreclose on them because that money is owed. I mean, and let's be honest, that is just that's the reality of it. So now we've created these people who owned their home. Now we have created a homeless population of senior citizens. That's not okay. Like, this is a slippery slope that is terrifying me.
Or the people who maybe bought, let's say, for example, in that one particular community, let's say they bought, I don't even know, 8 months after Ian, right? So there was no talk of that assessment. There wasn't. That happened many months after that even. So, and we always warn people, at least I do, listen, I can't tell you about assessments because I don't know. And we can email the CAM and, get it in writing. Nobody knows. But now they bought in there. Every number was okay, right? The numbers worked. It was all good. Really? And now there's a $34,000 assessment. They're not going to be able to pay that.
So, right. So, I mean, there have to be solutions, because otherwise, just like we're saying, these people are going to be home. There has to be, and I do actually think it has to be, again, hate to say it, a legislative, a governmental assistance program,
right,
that can get paid back. I don't, second word, I don't know.
There's gotta be a solution somewhere, because these were problems that none of us created. That's just the God's honest truth. If we're alive now, we didn't build these things, in the 60s,
Right.
we didn't build them, we didn't create all these things. We didn't make the policies. But if these HOAs, if these associations fold because they don't have the budget, they don't have the reserves, and the government comes in and takes these communities, we're going to have how many state-run associations?
And is there even a mechanism for that? See, we're
No.
going down a dystopian path that I didn't even see coming. And this is why I'm glad we're having these conversations, because I think they need to be had out loud. But yeah, that because it ends up, there's no mechanism. What happens?
The VA is broken. The VA is broken as a whole, right? Let's just take that as an example. The VA is broken, and there is literally now people hired by the VA to fight the VA with the disability claims for veterans. And I know this because my husbands were dealing with it. So we have a department within the VA that their job is to fight their own employer to get the disability claims paid out for our veterans.
And that's insane. Yeah.
Now we're going to do this on a level with, let's just, again, CAMs, HOAs. So we're going to have a department within the government to run associations. And then we're going to need a checks and balance for those people who are going to now be fighting against the new regulations.
Yeah, no, that's really scary. So I guess really the next question that we need to start going down the rabbit hole of is what happens when these associations fail? And I don't necessarily think in my market it's as big of a risk. It is, but it will affect us because any of the legislation is going to affect me up here.
Right.
But where you are, it's a much bigger risk and it's a much bigger concern for sure. Like Jacksonville, we just don't have, it's just different here.
Your buildings are newer, right? So it obviously, like my house I live in now, it was built 2019. It sat vacant for a year before we bought it, right? So yes, the hurricanes are horrible in this area, but I have impact windows, right? So some of my concerns when it comes to the hurricane are drastically different than a house that doesn't even have shutters or is boarded up or single hung windows, not this and that. So my concern is different. And it's the same thing, I think, with the condos, right? Ultimately, there's a trickle down effect because my insurance will go up, right? I will feel the broader effects of that. And unfortunately, that's what we're going to see when it comes to the condos.
Yeah, absolutely. Well, we are kind of getting to the end of the Zoom and on this happy note. No, but I'm really glad if we don't identify the problem, we can't come up with a solution. And I do think our industry is going to have to be the driver of the solution because like, I don't, who else is going to do it? Right. I mean, and just as an industry, who else is going to do it? I don't know. I mean, I think CAMs need, again, not trying to dog CAMs, but I don't think the bandwidth is there. And I don't think the bandwidth is there in that industry. I think they are terrified of what's getting ready to happen to them. And it doesn't have to be like this. And neither of us are particularly negative people, but I'm
a realist. Yeah, I'm a realist. Like, what is most likely to occur? What's the pattern? Let's try to identify the problem first so we can then figure out a solution.
Yeah, and I think that's where we are. And this is literally going to shut off in about 30 seconds. So thank you so much. I know, thank you so much. I know you're busy. I really appreciate your time, and let's continue this again soon.
I appreciate you. Absolutely. Thank you. Talk to you later.
Bye.
Bye.